Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull bear point and figure market breadth summary chart for April 2nd, 2017. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 1.31 rose from 1.10 last week, gaining strength and remaining within bullish territory. The total count of securities in bullish or bearish patterns decreased 3% to 3,007. The count of bearish stocks decreased 12%, while the count of stocks in bullish patterns increased 5%. The Pirls PNF Market Breadth Summary Chart shows us a market now 20 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the Pirls Stock Market Commentary via email, free of charge on a weekly basis, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 90 points for the 10th decline in 20 weeks. At a positive 4.92 points, it continues below all 7 tops above plus 100 and continues above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum, now at a positive 121.64, up from a negative 72.63 last week. The CCI 20 daily fell below zero for 5 consecutive days before rising above it, so the Woody's trend remains up. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 48 weeks ago, while the daily CCI 20 began a Woody's uptrend 19 weeks ago. The CCI 20 weekly has fallen to a positive 94.86 from a positive 96.47 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary, some tech and REITs on top, banking and brokers on the bottom. Bullish, computer hardware continues in the top 5. REITs continues in the top 5. Disk drives has re-entered the top 5. Gold and silver has left the top 5. Bearish, KBW Bank and brokers continue in the bottom 5. Networkers has entered the bottom 5. Oil services and oil have left the bottom 5. Focus this week from www.zerohedge.com, because a good detective story is always fun, and from our Stabilizing the Market by Betting Like You Want to Destabilize It department. Who is the real 50 Cent? A mystery trader is systematically betting massive on a VIX spike. The following are some key points and charts. VIX call volumes had exploded in recent weeks, accelerating to their highest levels since Brexit, ahead of the healthcare vote, which saw VIX spike dramatically to 2017 highs. However, in the aftermath of the pulled vote debacle, VIX collapsed at a near record pace, as did VIX call volumes, trading at their lowest level since 2016. The question many had was, why the sudden rush to complacency after an event that merely increases the uncertainty of Trump stimulus, the only leg left standing for any self-respecting asset gatherer defending long stocks to his client base? Pravit Chintawongvanich, head of risk strategy at Macro Risk Advisors, may have found the answer. A pattern of huge near-daily trades on the VIX is turning heads in the options market. What's most notable is that even after losing some $75 million by betting on a volatility spike, the huge options buyer known as 50 Cent shows no signs of slowing down. Quote, "I would categorize them as someone who doesn't flinch at losing money," end quote, commented Chingatongovich, who flagged the activity in a series of research notes. The money-losing trades in question have been purchases of call options on the CBOE Volatility Index. These represent bets that market volatility is set to rise, and to a lesser extent, that stocks are set to fall. Unsurprisingly, this strategy appears to have a marked effect on the overall market for VIX options. Total VIX call open interest has risen to an all-time high, thanks to 50 Cent's purchases, Chintawongvanich said. And so we come full circle to the question of why the sudden rush to complacency among options traders following the pulled healthcare vote. Ironically, the huge bets on the VIX could end up dampening volatility. Jake Weinig, founding partner at options-centric hedge fund Malachite Capital, commented in an email to CNBC that, quote, "the size is probably too big," end quote. The very enormity of the trade, quote, "almost makes it a self-fulfilling prophecy that it won't pan out," end quote. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.